realize we're going ahead and recording. So got a number of customers that couldn't attend today, but would like to see the video. My name is Tom Strange. I'm the co-founder and CEO of the Solution Design Group, the makers of RevenueVision. And what we're going to talk about today is GASB87 and the optional RevenueVision module that addresses the GASB87 concerns. This is relatively informal. Everybody on the call today is a RevenueVision customer. I thought we could go around the room. We've got a number of people here, but perhaps we can go around the room and have everybody introduce themselves. And what I'll do is just call your name, and you can remove your button and introduce yourselves. Then we're going to talk about GASB87, the steps to a smooth implementation. We'll give an actual demonstration of the module, and then questions and answers. What I thought we'd do first is go ahead and introduce the Solution Design Group. We'll start with Steve. Steve?
Hello, I'm Stephen Peacock. I'm also co-founder of the Solution Design Group, the Chief Technology Officer. My team pretty much builds and keeps the software running, and we're the ones that put together the GASB87 feature and built it in, so hopefully it'll accomplish what everybody needs to in terms of complying with the new requirements.
Okay, Kim?
Hi, I'm Kim Compton. I'm manager of client services, the ones who will help support you in implementation of GASB87 and beyond.
Okay, Corey?
Hey everyone, I'm Corey, and I work with the client services team, so I work directly with you on projects, and in the future, GASB87 also.
And Yodi?
Hi everyone, my name is Yodi. I also work with the client services team to help support the implementation of RevenueVision as well as GASB87.
Great, thank you. So I'm going to go down the list in the participant view the way it's ordered. So Claire, actually, you're first.
Hi, I'm Claire Warmfeld. I'm the Associate Controller at George Mason University.
Thank you. Danelle?
Hi everyone, I'm Janelle Harrison. I'm the Risk Management Specialist for North Carolina Central University. And also with me today is...
Hi, this is Jackie Mara, the Business Officer for Business Auxiliary Service for North Carolina Central University.
Thank you. Milena?
This is Milena Carpenter. I'm the Director of Finance for Auxiliary Services at Georgia College and State University.
Okay, Danielle?
Hi, I'm Danielle Kirby. I work in the Business Services Department at George Mason University.
Terrific. Joy?
Good morning, I'm Joy Soborowski. I'm the Financial Reporting Manager at George Mason University.
Mark Craner?
Mark Craner with George Mason University.
Thank you. Michelle?
I'm Michelle Higgs. I work in Business and Auxiliary Operations for State College of Florida in Bradenton. Thank you.
Okay, Philip?
Hi, my name is Philip Robles, and I'm the Business Manager for Auxiliary Services at New Mexico State University.
Rebecca?
I'm Rebecca Ferda, Director of Business and Auxiliary Services at the State College of Florida.
All right. Scott?
Yes, I'm Scott Millman. I'm the Associate Vice Chancellor for Campus Enterprises and Real Estate at the University of North Carolina at Greensboro.
And Sherry?
Hi, good morning. I'm Sherry Baggett, Controller for the University Corporation Auxiliary of California State University, Monterey Bay.
Terrific. Is there anybody that I missed?
Tom, this is Kim Huddleston with New Mexico State University, Director of Auxiliary Business Support.
Oh, welcome, Kim. Thanks, everybody. So what is GASB87? It's the new lease accounting standard that is mandated for all governmental and public higher education entities for reporting periods that begin after June 15th of 2021. Originally, it was supposed to begin this past year, but because of the pandemic, GASB gave a reprieve on terms of when GASB87 had to be implemented. And really, it just fundamentally changes the way leases are accounted for and financial statements are prepared, and at a very high level If you have a revenue producing lease, it essentially becomes an asset on your balance sheet. And if you have a lease where you're spending money, it becomes a liability and needs to be different accounting entries. And we'll go into that in a little more detail in a moment. What's also interesting is that there are similar types of agreements, such as software subscription agreements that you may have with a company like ours that may be a multi-year agreement that may actually fall under the same type of reporting guidelines in a future GASB standard. So it's something that we all need to think about and consider as we go through. So what types of contracts does GASB87 apply to? And I should back up and say I'm not an accountant or an auditor, and nobody on the SDG team is an accountant or an auditor. But so we're not going to give you accounting or advice, certainly, but we can lay out for you what the general requirements are according to the guidance. And so, oh, someone just joined. I believe that was Jaretta. Jaretta, if you want to introduce yourself.
Hello, I'm Jaretta Harris, Associate Vice President for Auxiliary Enterprises at Ferris State University, and I believe our Director of Financial Services is coming. We just got off of another call that went a few minutes late, so Nicole Lintonmuth should be joining us shortly as well.
Thank you. So getting back to the slide, any contract, whether it's identified as a lease or not, that conveys control of the right to use another entity's non-financial asset for a period of time is considered, is one of those types of contracts. Contracts that are less than 12 months duration do not typically fall under GASB87. And concession agreements and things that don't have fixed charges typically would not fall under GASB87 either. But many things do, and certainly as we've been thinking about changes that have been made to many agreements with business partners and others right now and suppliers as it relates to COVID have certainly changes any number of things, such as terms and forgiveness and rates and any number of those types of things. The steps to implement GASB87, and these are not my recommendations. These actually came from Baker Tilly. What they've said is you've got to create an inventory of those potential contracts to evaluate, determine which ones meet the criteria for GASB87, and then review those contracts for multiple components. A good example may be where you've got a concession that's got rent that they're paying the university at a fixed amount, and you're getting a variable commission based on sales and things like that. So looking at those types of things, identify any contracts that can be excluded. And then the last two steps that we kind of highlighted in purple here are the ones that RevenueVision's new module can help you with in terms of getting the key data from the contracts, calculating the lease liability or asset or receivable deferred inflow or outflow, and then collecting the data required for the footnote disclosures under GASB87. And I'm going to let Steve Peacock talk through this next slide about the before and after. And after Steve is through going with this slide, and before we get into the demonstration itself, we'll pause for any questions that folks may have at that time. So Steve?
All right, thank you. Basically, one of the impacts of GASB87 is that the idea, and I'm talking on this from a lessor point of view, is that used to, basically, whenever you billed somebody for their monthly rent, you went over and you debited your receivables and you credited a revenue account. And that was basically all you had to recognize on a month-to-month basis or on a regular basis. With GASB87, one of the goals of the advice from the board is to show that that lease that you have is an asset as opposed to it simply being revenue that you're receiving each month. On the opposite side, if you're a leasee, you're wanting to show it as a liability as opposed to it simply being an expense each month. So what we have new in GASB87 is at the very top here in our after GASB87, there's a new asset created that's going to show on the balance sheet as a lease receivable. And there's a new liability, or pseudo liability, as some of my accounting friends have called it, called a deferred inflow. And the amount of each of those is basically the present value of the lease. So if you have a lease that's $1,000 a month over 24 months, the deferred inflow is going to be like, and the lease receivable are going to be like today's interest rates, $22,000 probably. That's the first thing you have to do is whenever you create a lease, there is a general ledger entry that has to be made, and it has to be made based on the present value of that lease. Whereas previously you didn't make any entries until you actually were recording the fact that you received it. And then secondly, you still have the ability then whenever you actually collect a month's rent, you're going to have to decrease the lease receivable and obviously decrease the inflow to balance out, because you need to decrease the asset and then decrease the liability over on the other side. You're probably still going to put money into your accounts receivable because you're still collecting $1,000 a month, but the revenue you're getting off that really ends up getting split between two kinds of revenue. Part of it's going to be lease revenue and the other part's going to be interest revenue. So as you go through each month collecting that rent, you're going to basically take the part that was considered interest, the present value minus the total value that belongs there, and charge it to your interest revenue, and the rest of it goes to the lease revenue. And there is not a explicit statement of how you have to do that. It just says you must do it in a systematic manner. So we've chosen to do it and do an implementation that lets you do it using the present value of each of the payments as you go through the flow. And as we get into the demo, you'll see that. So it's a little bit more involved, the general ledger entries you're going to have to make and the information you're going to have to do, starting with GASB87. And what we've done is put some features into RevenueVision that we can turn on as the GASB87 module that'll allow you to track some of this information. One of the requirements also of GASB87 is whenever you're doing whenever you're putting your financial statements together, is you have to be able to show a schedule of how that lease revenue and that lease receivable is being decreased over the period of the lease, sort of an amortization schedule, if you will. And that's some of the stuff we can do with the budgeting module and so forth with the GASB87 features turned on. But that's just sort of a summary of what your accounting impact is as we understand it.
Okay, we'll pause there for a second and see if anybody has questions before we go into the demonstration. I think it'll make a little more sense once we're in the demo.
So this is Claire. I have a question. So this is taking this from a lessor side. So your software is going to be able to handle both sides of the transaction, us as a lessor and as a lessee, or
Yes.
just one or the other?
Correct. Pretty much the only difference between the two sides is instead of deferred inflow, it's called deferred outflow, and it's a lease payable as opposed to a lease receivable. So it's pretty much just the labeling of the accounting. The math and everything that goes in there is the same.
That is great, because I can tell you when we've looked at other softwares, most of them will only do it, handle the transactions from a lessee point of view, not from a lessor. So this is good news. Thank you. And I think you had a question in the chat.
Oh, okay.
Thanks.
Oh. Tom, somebody's asking, they'll have access to the slides, I'm presuming.
Yep, I see it now. Yeah, we will, this is actually being recorded, and so we'll have the recording available for anyone who's attended, and Actually, we have a couple of our other RevenueVision customers that could not attend today that would like to see the recording as well. Thank you, Claire. All right, so any other questions before we jump in? Okay, terrific. So I'm going to stop sharing my screen and Steve is going to share his.
Okay, and at some point, everybody should see a RevenueVision screen. I can't hear anybody anymore.
Steve, we can see it.
Okay, all right, good. I'm just going to go in. We're going to take this, at least initially, from the point of view of what happens if you have a contract that that you decide qualifies as a GASB87 contract. So in our demo system, I made a copy of one of our basic leases a little bit earlier and sort of set it up. And this is the Peacock's Roost Realty lease with the Eagles Nest Realty Company. It's a lease agreement for off-campus student housing. And you can see it has a current value that's just grossly calculated out at roughly $4.2 million. If we go look, the contract register entry templates have been entered in RevenueVision for it. So we currently have a monthly rent, a monthly maintenance amount that's a pass-through that are fixed, and they go from 2020 through 2024. And if we decide this is going to be a GASB contract, the first thing we're going to do is we're going to come up here and we're going to say, you know, whenever the GASB87 module's turned on, there's a tag that lets us turn it into a GASB contract. And now that we've done that, you'll see a couple of things have happened. One is that we now have a GASB87 net present value, a GASB87 rate fields added to it. And so with those added, we also have a GASB87 net present value date. So whenever we do calculate net present value and so forth, we can keep track of some of that information. First thing I'm going to do is go in and put a rate. We'll just use a simple 2% interest rate for this particular point in time. And once we have a rate, we can start doing our GASB work, if you will. And so the first thing we might want to do is know what the present value of this contract is. We have this calculate button that's up here. If you're a regular RevenueVision user starting in version 34, you hit this calculate button and it'll go look at your transaction templates and figure out what the gross value of the contract is. If GASB87's turned on, it's also going to calculate the net present value over the life of those contracts. So we can see with a low interest rate, it ends up being about 4.1 million is the current present value. And that would provide us with the number we need to go enter into the inflow or the outflow if this was an expense. If this was a contract where we were the opposite, we were the leasee instead of the leaseor. So now we have this. One of the things that also happens whenever we did that is over in the comments, you can see that the interest rate, oh, there's one left over from when I was messing around earlier today. You can see the interest rate value was updated and we calculated the value. So we have a history of the fact that somebody has hit that calculate button. So one of the first things that you sort of have to do is, we talked about, oops, this is inflow. We talked about the fact that you need to be able to give a schedule. So using the budget feature, you can choose to create a GASB87 compliant budget. And whenever we generate this budget, it's basically going to go out there and let me just pull up all of it at once. We'll see that starting, this contract started January 1, 2020. You can see that starting there, the rental amount, or in this case, actually, it'll be the rental and the maintenance amount because they're fixed. We can see that there obviously is no interest revenue the first month because the present value is the present value. But starting with each additional month, you can see where there's an interest calculation that goes there. And it allows us to see what the to see what that is and to print this out using one of the budget reports or using the ad hoc report tool to go in and pull up a budget to see the schedule all the way down through that last period in April 2025, where there's $6,900 that would be put to interest and $62,000 that would not, or would be your revenue amount. So, and then we can also access that information via the...
Steve?
Yeah.
Sorry to interrupt you. It might be good to go point out the transaction templates.
Oh, okay.
So that people understand.
That a little earlier. All right, these are the transaction templates. We'd looked at them briefly earlier. You can see it starts out with $44,000 a month in rent on a monthly basis, and then the maintenance amount was $20,500 a month was a fixed amount. And then starting in 2021, in May of 21, that amount goes up just a little bit, and the maintenance amount goes up just a little bit. And you sort of have your escalations all put into here so that you can, so that we can make all those calculations for the budget and so forth. All right. You also get a view, if you want to, from a larger thing. If I go over to my budget module and pull up, let's see, here we are, GASB87 interest and GASB87 Exflow. And you can see I have another contract that's already out there, the Eagles Nest Realty contract that's tagged as GASB87. So you can drill down through this budget screen and sort of see what your interest in your GASB Exflow, whether it's inflow or outflow, sort of falls into. If I come back to my contract, and now that we're here, now that I tagged that one with GASB87, I can pull up all my GASB87 contracts. I can take my Eagles Roost Realty contract, or my Peacock's Roost. And one of the things you do on a regular basis is, and actually I'll just, you're generating your contract register entries. And so in this case, because the first month wouldn't be all that interesting, let's just go ahead and generate one from the middle of the year. And you'll see I have my rent and my maintenance. So whenever I select these two and choose to add it, traditionally, those of you that are using RevenueVision, you see two contract entries added. You'd see these first two, the monthly maintenance, the monthly rent with those amounts. See, what we're doing is we then create 4, in this case, tracking entries for each one of the entries. So for 2020 maintenance, we have an outflow or deferred inflow entry that's created. And then we have an interest entry that's created. So you can see the $20,537 and some odd cents, 20,401 was the inflow that impact, and the $136.35 is the interest impact. And you see on the actual rent, 43,766 and the 292. So once those are done, we now have, and because the way RevenueVision works, I did the add in the large section. So we now have our monthly entries. Because those are tracking entries, they don't automatically show up. So we have to mess with the filter. And so we see on a monthly basis as we're going through, we'll see that these things are being, the interest is being created, the actual revenue entry is being created. And if we go run one of the standard reports that summarizes us by GL code, let's see, we did May. There it is. we can then see the individual entries with their GL codes, and then we can see the GL entries that we would make down below here with the interest revenue, the deferred inflow and deferred outflow. I think were those last two, the 9,600, 9,620, if I remember right. And anyway, so we've got those entries that exist, and we're set for that. So that sort of, if we go back to the contract, and we look at it, there's a couple of other little things that are happening in the background whenever whoops, I want the last column. If we look at the budget, or if we go back and look at the compacts, we can see when the budget was created, who created the budget, and what the assumptions were. That is, the basis date and the interest rate are stated there. And we got that. And then we've also got we can go back to the budget, and if I look at May of 2020 on my GASB inflow, you'll see that I had my interest, and then I have my actuals and my you can see I have no variance. In other words, I took care of my inflow and my interest in those particular months because the budget was there. I haven't run those for the Peacock's Roost those previous months. That's why you're seeing the lower numbers there, or the difference in the variance. But that sort of summarizes what the features are that are there, and what we've done to try and help you get to that new world that was presented on the right side of that slide.
What it probably makes sense for me to just mention a little bit. What we wanted to be able to do is, so much of this data is being tracked in RevenueVision anyway for contracts that you may have. You've got the contract start dates, you've got the contract end dates. In general, you've got those transaction templates or financial rules associated with that lease. And so our whole approach was, well, let's meet the GASB87 requirement as simply as we can. And so by tagging a few things, running some budgets, and automating that, it gives you a good way to calculate those numbers and have the information you need for the footnotes without having to buy a whole new piece of software just for lease accounting and lease administration. So that was kind of the idea behind it, and certainly more than willing to answer any questions that you may have about this particular module.
Hey, Tom.
Yes.
Scott Millman. Got a question. Many times our leases are between the university and one of our foundations. And so, but it's the same contract. Is there a way to get both the inflows and the outflows on GASB, or do you have to put it in as two separate contracts? Do you understand what I'm saying? So one side would be looking, like the foundation would be looking at it in one way, and the university would be looking at it the other way. Foundation's an affiliated entity.
Now, the foundation, do they follow GASB rules, or do they follow FASB rules? Do you know?
I'm not sure. I would assume they follow, because it all rolls up into a blended financial statement at the end of the year. So they follow the same rules, I'm sure, as the university.
I was going to say they're nonprofit. I would imagine they're following GASB.
Yeah, GASB.
It's interesting. I'm not sure. I think if you read the guide, I was just looking, I was going to see if I could find the exact spot in the guidance. I know whenever I read through the guidance, one of the things I found interesting was there was here it was. Generally, a government should account for lease and non-lease components of a lease in separate contracts. And I know I read some discussion that was related to that, talking about whenever you have a contract that has a fixed amount and a variable amount, which is very common on, I mean, think about most of your, you have a guaranteed revenue and then you get paid a percentage or that kind of thing. What GASB, what the board is saying really is you should have two separate contracts. If at least that's the way I read that, but I'm not an accountant. But I would almost sound like they would say that the foundation should have its contracts and the university should have its contracts. And while they may be with each other, each entity should represent those contracts independently within itself. But like I said, that's a question probably for Deloitte or PwC.
Well, I think they do. I think they do. It's more of a way to like the accounting of it, the calculation.
Right. This is Claire. Can I ask a question, Scott? Would they be using different rates, discount rates, or the same discount rate?
Hold on one second. I think the same.
Then would you not be able to put it in once and then flip the entry for the other half? And if you're blending them, would it not get eliminated on the blended financials?
Yeah, but each of them do their own financial
standalones as well.
Yes.
Okay. Yeah.
But I guess you're right. I guess you could look at it one way and just do the opposite
for the other half of the entry.
That's right.
For the other organization, right?
Yep.
And not have to put it in separately, provided you're using the same rate.
That makes sense.
Okay.
Thanks, Claire.
I can tell you my team is going, oh, there she goes again.
Okay. Any other thoughts or questions? I know that one of the schools, I believe it was State College of Florida, was asking if other folks had cell tower leases that were revenue producing. And I know several of the schools out there probably do. But they may fall under that same kind of criteria for GASB. Okay, any other thoughts, questions? I know this is new to many folks on the non-financial reporting side, but I think for the folks that in the controller's office and do the financial reporting have probably at least been thinking about GASB for some period of time.
I have a question. So the report that you just showed us earlier, that when you run the a summary of a contract with the journal entry report, is there a way to run the report for all the leases, all the contracts? Or do we have to run that individually, contract by contract?
Well, I have to go run the report because I can't remember. I believe that report breaks it out. Even if you choose to run it for all contracts, it's going to run it for, it's going to break it out by contract whenever it displays it.
And is that, can we explode it into Excel?
As with all the reports, the standard reports, there's a way to output and export it. You can choose to go to Excel, PDF, PowerPoint, whatever you want to there. Now, another way, and we did not look at it, but because these are contract register entries, they're also available on through the Adhoc Reporting tool, which is also directly reportable into Excel.
Steve,
Excel.
Do you need to share your screen again? Because you stopped, I believe.
I can't.
You need to, but.
Hold on, let me restore it to a state of sharing. Desktop 2. Report here. Just go into the ad hoc. RD standard contract transaction should let me do it.
What Steve has done now is he's gone into the ad hoc reporting tool that's standard in RevenueVision, and he's drilling into the cubes that contain that information.
And let's just grab year and throw over here. And I'm trying to remember the things I'm going to want to do. Let's start here. Let's just do that for the GASB87 flow and interest. And actually, let's pull that into there. So here's one that's doing that. Now this has both inflow and outflow because these are there. Let's just leave the inflow ones. So this, and the Eagle's Nest was not set up completely whenever it started, but this is 2020 would be a 2020 year-to-date breakout by the transaction types, which is inflow and interest that's brought down. I don't remember the transaction type on the interest, but it could also be limited by GL codes if you wanted to, and you could just get the output by GL codes here. Like I said, since they're all set, I'm not choosing them for that because then stuff would disappear. But
then you could do sums and everything.
Right.
That as well.
Yeah, I mean, you can, let's see. Is that where you can do, yeah, show subtotals there. So you have the subtotals by the different amounts and all.
Did that answer your question?
Yeah, this would come to, like if I need the report, I can use this tool, but I just interested to see that, the one that you calculate after you calculate the present value, and then it shows a complete set of journal entry, including like the maintenance fee, the gas fee, so all the entries related to the contract. And I just wondering like if there's a report that you can include all the contract, complete set of entry, so for if we were using it to book our entry, can we, rather than going in to run the transaction for each contract, can we run it in group, in total?
Because you just want to make one entry for everything, for all the contracts?
No, I want all the entries to be
okay.
Report. Yeah, so I don't have to go to run different reports.
Let me get a, let's just for grins, get another month in here and I can show you another. We can run it for multiple contracts.
And one of the things that we should have mentioned, and I think most RevenueVision users are aware of this, but you can set up a schedule so that these things automatically execute each month, where Steve went in and he chose the rent and the maintenance and added those and actually created the invoice. Well, that can be done on a schedule, which would also create the GASB87 entries as well.
I see.
Let's run this for, okay, so we ran this for October and we should now have, whoops, no, I've only got one selected, hold on. All right, so this is the, all right, I was trying to remember how they're, this is the report run for the two. Right? So you can see the individual entries for each contract, but then the GL entries are summarized across all of the contracts you're displaying.
Nice.
And so I just ran it for 1 month because those are the two I know I have data in there for. But because it's the demo system, it's got a variety of different data in there that is sort of spread out. But that shows you exactly what the GASB87 data would be.
Got it. Thank you.
Okay. Any other thoughts, questions, comments that we can answer?
So this is Claire again. So this is a separate module as part of RevenueVision. Is that what you mentioned?
That's correct.
Okay. And is it available now?
It is.
It is. Okay.
Yes.
Thank you.
And of course, like most of you all know, as we're very much open to suggestions on enhancements and improvements, because that's how we make the software better. And GASB87, this module is new to everybody right now. So if there are things that are good suggestions that could be incorporated into the product as we continue, we certainly want to listen to those and hear those. Okay. One last opportunity for questions. And we can adjourn. I was trying to hold this to 45 minutes, and I think I'm a minute or two away from short of that. So appreciate everybody taking the time today. If you do need additional information, please let me know. If you'd like to get a recording, actually what we'll do is we'll send out the link to the recording to anybody who attended today. That way you have it.
Yes, please.
Definitely. Thank you very much. Great presentation.
Well, thanks everybody for attending. It's nice to be able to give a presentation just to our members and friends of the RevenueVision family. So if we don't have a chance to speak between now and the holidays, hope everybody has a very good holiday. And for those of us that are on the East Coast in the snow today, certainly drive safely if you have to go anywhere.
Thank you.
Thank you very much.
Thanks, everyone.
Thank you.
Thank you.
Have a great day.
Yep. Bye-bye.